All right, let's get right into it. The big question on everyone's mind is, what is actually moving the markets? Because let's be honest, right now the signals are pointing in completely opposite directions. It's a puzzle that's confusing even for the pros.
So, yeah, what is going on here? I mean, on one hand, you've got the tech sector just exploding, supercharged by AI. But on the other hand, you have some of the world's biggest economies showing some really serious signs of weakness. How can both of those things be true at once? Okay, let's dig in and try to figure this out.
You know what this really boils down to is a tale of two completely different economies. Seriously, you've got this AI-fueled growth story, right, where these tech giants are just pouring unbelievable amounts of money into the future. And then you've got the global slowdown story, where some really fundamental indicators are, well, they're flashing red. And these two stories are locked in this constant, tense tug-of-war for the market. So to really get a feel for this, let's start by zooming in on the day-to-day confusion happening on Wall Street. It's really the perfect snapshot of this bigger conflict, you know? You can see the optimism and the worry clashing like every single day. And get this, you can see this tension even inside the tech world. So you've got companies like Meta and Microsoft. Their shares actually fell after they announced these massive spending plans for AI. Investors kind of got spooked by the huge upfront costs. But then, on the flip side, Google's parent company, Alphabet, saw its stock climb because of strong results. And this just perfectly highlights the market's big dilemma right now. How do you balance the incredible long-term promise of AI against its very real and very, very high short-term price tag?
Okay, so let's dive into that first story, the optimistic one. We're talking about the incredible boom being driven by big tech's massive, all-in bet on artificial intelligence.
And honestly, there is no better example of this than Amazon. Their latest earnings report, wow. It wasn't just good, it was a really powerful signal that this AI-driven part of the economy is absolutely firing on all cylinders.
Just look at this number. Amazon pulled in $180.2 billion in a single quarter. That didn't just meet expectations, it completely blew past them. It's a number that just shows you the sheer scale and the momentum of this AI-powered growth.
But here's the really crucial detail, the part that matters most. Growth in their cloud division, AWS, hit 20%. Now, why is that so important? Well, because Amazon themselves said this was driven by a huge demand for AI and all the core infrastructure that goes with it. So you see, this isn't just hype. It is directly translating into massive real-world revenue.
All right, let's switch gears to another tech titan, because the story just keeps building. Over at Apple, the confidence is just as high, if not higher. They're actually forecasting what could be their biggest holiday season ever, and it's all being driven by their flagship product.
Yeah, CEO Tim Cook did not hold back. He's on record expecting the iPhone 17 to lead to, and I quote, the best December quarter in the history of the company. I mean, think about that. That is an unbelievable statement of confidence. It suggests that even with all these wider economic worries floating around, that high-end consumer market is still incredibly strong.
Okay, so if this whole AI revolution is like a modern-day gold rush, right? Then there's one company out there that's basically selling all the picks and shovels to everyone. And of course, that's NVIDIA. And their latest deal, it just shows you the mind-boggling scale of this whole boom. More than 260,000 advanced AI chips. Just think about that for a second. That is how many NVIDIA is shipping to South Korea alone. This isn't just a number on a slide, it's a physical, tangible sign of how AI is literally reshaping global industries and even national strategies. And look who's buying them. It's basically a cross-section of an entire national economy. We're talking about corporate giants like Samsung and Hyundai who are using them to build smart factories. And it goes all the way to the South Korean government itself, which is pouring money into building its own domestic AI capabilities. This isn't just a simple sale. It's a full-scale industrial transformation happening right before our eyes. So the picture seems pretty clear, doesn't it? A massive, unstoppable tech boom. But what if this incredible optimism doesn't tell the whole story? What if there's another, much more worrying narrative happening at the exact same time? All right, let's completely pivot now to the other side of our story. Because while big tech is soaring to new heights, a major warning sign is flashing from one of the world's most critical economic engines. Okay, before we get to the data, let's just quickly get on the same page about this term, PMI. The easiest way to think of it is like a monthly health check for a country's manufacturing sector. If the number is below 50, it means things are shrinking, not growing. It's a really important indicator for where things are headed.
So this chart right here shows China's manufacturing PMI for October. Now, analysts were already expecting it to be in contraction territory, below that 50 mark. But the actual number came in even lower than the forecast. What this tells us is that the manufacturing heart of the global economy isn't just slowing down, it's actually shrinking, and faster than a lot of people predicted.
And this is really important. This isn't just a one-time blip. This marks the 7th month in a row that China's manufacturing has been in contraction. That's a pretty persistent trend, and it points to some sustained weakness, probably coming from sluggish demand at home. This is the other side of the global coin.
Okay, so let's bring these two totally conflicting stories back together. On one side, we have this AI-powered rocket ship just taking off. On the other, we have a global factory that's showing signs of a pretty serious slowdown. So how on earth do we make sense of this?
Well, it really breaks down like this. On the one side, you've got the AI economy. The outlook? Record revenue forecasts from giants like Amazon and Apple. The driver? Massive investment in AI and the cloud. And the prime example is that huge NVIDIA chip deal. But on the other side, you have the global economy. Its outlook is a persistent manufacturing contraction. The driver there seems to be sluggish domestic demand and trade issues. And the best example is China's PMI data, stuck in contraction for 7 straight months. Two completely different worlds, happening at the same time.
And this brings us to the most crucial point of all. The defining feature of the market right now isn't one of these trends or the other. It's the tension between them. Both of these powerful opposing forces are totally real, and they're happening at the same time, pulling the market in different directions almost every single day.
And that, of course, leaves us with the billion-dollar question that, frankly, nobody has the answer to yet. Which of these forces is ultimately going to win out? Is the sheer power and investment in the AI boom going to be enough to pull the rest of the global economy up with it? Or is the weight of a broader global slowdown eventually going to drag even the highest-flying tech giants back down to earth? That right there is the central uncertainty facing all of us today.